busy. You know, really what we're seeing is much bigger than Bitcoin. It's a classic liquidity crisis. We saw it in 2008. We're seeing it again right now. You always, if you were around back then, obviously Bitcoin wasn't around, but everything was tanking the same way it is right now, right? You had gold unwinding, you had everything happening the way it is right now, except what's even more insane about this time around is the fact of U.S. treasuries, the way they're reacting, right? Which has major ramifications for the whole world, which is why you're seeing things like what you're seeing in Bitcoin happen. You know, we spoke about risk at the end of last video, keeping your risk tight, okay? Because things like this in today's world, everybody is so inundated with the idea of easy money and just like in a bubble. You know, I'm not saying anybody who's watching this video, but just the world in general. Like, you saw how complacent the world became, you know, just living in this, you know, fake utopian idea that, like, oh, the stock market can't do nothing but go up. The Fed's always going to be there to save us. You know, we live in a bubble. There's no such thing as fundamentals, blah, 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 etc., etc. So realistically, like, what's happening right now is not really shocking. It's violent and scary to some degree, right? I mean, I lost a little bit of money in this, just getting kind of cute here and there, you know, which is completely my fault for not seeing what was right in front of me via Cignals. That's why we created Cignals, for crying out loud, is because, you know, having been through this once before in 08, 09, just trading traditional markets, we figured, you know, we better get ready to follow the volume in Bitcoin, because things can get crazy on both sides, up and down. We've been advocating that from every video that we've made since the beginning. You know, be cautious, put your stops in. What you're seeing is a liquidity crisis. Liquidity starts and stops all moves. It doesn't matter what asset class. If there is nothing on the book, right? Let's say it's bid 8,900, ask 8,901. If that bid column just disappears, right, and the next bid isn't until 5,000, guess where the price is going? You know what I mean? Until the volume comes back. And if it doesn't come back, there's no market. That's why we created Cignals, so you can follow the auction theory, you can follow the order flow, you can follow the imbalance, the footprint, all of that, right? Things candlesticks can't really show you. So it was my fault that I lost money here, and I didn't lose a ton, so I'm like really kind of just fortunate, you know, just kind of making up for lost time now that we know the situation. Again, it's bigger than Bitcoin. What's going to happen here is, you know, it's governments, sovereign wealth funds, it's pension funds, hedge funds, everything that is tied to risk is getting dumped to create liquidity so that new intermarket flows can happen, right? So what happens in a liquidity crisis is, you know, and Bitcoin is just an asset here, okay? Once this rebalance happens, it's a different story. But initially, which is the onset phase of a liquidity issue, is you see stress in traditional markets, risk markets, and then that all sells off and people create initial waves of liquidity to fund other obligations, and you're going to get margin calls, you're going to get things like that. So pretty much anything that isn't essential is getting, anything not bolted to the floor with like the biggest wrench you could possibly find is going out the window, right? Baby with the bathwater type thing, all that. So that's why you're seeing these type of moves. And Bitcoin isn't the most liquid market to begin with, so you're going to get slippage. You're going to get all kinds of cross-market headwinds that you normally might not get in other assets, which is why Bitcoin is just getting destroyed on levels we haven't seen ever. Which is okay. I mean, this is something you'd expect to kind of happen here. You don't expect Bitcoin to have itself in one day, but you know, if you were around for the first liquidity crisis of at least that I could recall, '08, I was there watching it kind of unfold. It was pretty crazy. But this is a little crazier only because, I mean, look at the treasury market. That's That's a little worrisome in the sense that yields aren't like blowing out where you'd expect to see like some kind of like default risk being priced in. Like that's not even the issue, the type of liquidity risk that it is. It's basically saying that, you know, they're driving down growth. Like there's no growth. You're starting to see like basically almost zero yield on US 10 years and 30 years. All the growth is in the short end of the curve, and it's been flashing warning signs of a top for about 2 years, ever since S&P hit 2,800 in 2018. And you know, banks, the repo has been pretty much well documented and discussed how we've had liquidity issues there. You know, every time there's no such thing as fundamentals in the stock market anymore, in my opinion, because anytime there's even like the slightest little headwind, it's just it becomes a stress issue on the market, because we're trading at before this all happened like 3,400 S&P, which is like, I mean, let's just get a grip. But you know, anytime there was ever a hint of a problem, there was always that put under the market, the Bernanke put, the Yellen put, the Powell put, right? I mean, that's going to get tested at some point, and we're seeing it, right? Because risk assets, there's no reason to rally right now. You have Italy completely locked down, Spain completely locked down as of, you know, I think this weekend, and I think they just came out with something saying that the highest death spike in 24 hours in Italy or something like that. So, I mean, the economy of Europe and Asia and America to some degree is completely offline. I mean, we're talking completely, yeah, and it's going to create a risk for people that want dollars, that need dollars to fund their immediate obligations, business-wise, liabilities-wise. I mean, it's a supply chain issue at this point, but the system was never expected to go through this type of stress on a pandemic level, right, where we feared some type of sickness that we couldn't cure would start spreading throughout the world. But I mean, it's more than just that. It's more than just that. You're seeing the beginning of it right now. You're seeing the flight to the yen, you're seeing the flight into the dollar, and you're getting these crazy back and forth moves like up and down, right? You see it's classic, and it's going to get worse. You see it in gold, you see it in obviously the S&P, the Dow, FX markets, but Bitcoin is special because here, you know, we were trading in this range for a little bit of time where, you know, I was scalping this range. Like I said at the end of the last video, keep your risk tight. I'm going to scalp. I'm loving ETH shorts, right? I mean, look, at least that was really we'll get into that in a separate video, but I hope everybody at least listened and kept their risk tight, because obviously we got this dump into the swing pivot, which we kind of expected to happen given how mixed the moves up and down were leading up to this. So you got the support initially at the swing pivot, and then you got this is what we're talking about. This is the classic liquidity crisis right here brewing, okay? There's no buyers here. We're talking about they do not exist. They're gone. The book is completely, do you see this? It's gone. It doesn't exist, right? The little bit of buying activity there is just the spare orders that are getting collected more or less and wiped out. And then you have just this halving of the price of Bitcoin, like the rebalancing of risk. But it's not just Bitcoin, it's everything. There's a rebalancing and a repricing of risk across the globe, all markets. It's not going to spare anything in the interim. But what will happen at some point is there will be enough liquidity where we will find the bottom, okay? I've only been through this once, but in my experience, what you're going to see some crazy bazooka type of stuff out of the Fed. We're already hearing, as of tonight, Bank of America saying that there's going to be commercial paper purchases, which, again, liquidity crisis, right? Why do we need Fed intervention in the commercial market? Because a lot of that is tied to the Treasury yields, and the Treasury market liquidity and we're having issues there. So if corporate spreads start to blow out, there's going to be a lot of bankruptcies and a lot of layoffs and a lot of contagion, right? So it's interesting. That's where they went first, was the commercial paper market, because they're worried about the fact that a lot of junk is trading at prices that it really should. I mean, this is a whole separate issue that we really don't have time to get into, but you're going to see that type of bazooka talk, okay? The commercial market's an interesting place to start, but we're going to get more overnight, like infinite trillion-dollar credit lines for banks. Like, you're going to see like helicopter money type stuff happening now, in my opinion. I mean, because the market's telling you, dude, we don't believe anything you guys are telling us. Anything. Like, you need to come out with a fire hose of money and maybe we'll start believing you. That's what's happening. And it's crazy because once the liquidity, like at least for the time being, gets better in capital markets, where at least people are solvent again, right? You'll see that rebalance. Because if you think back to Brexit, okay, as the referendum was happening in real time, you saw FX markets get destroyed, like on levels that, I mean, to me, that was scarier than what we saw in Bitcoin. The only reason why this is scary is because of the fact that we just kind of went in half on just the book going completely dead, just no buyers, and then you finally got some buyers stepping in. This is Bitfinex. We know what happened on MEX. I mean, it went completely down. You had 10 to 20,000 ticks per second coming out of Binance. We were talking in the last video about machine trading in Bitcoin, and a lot of this is, you know, derived from that to some degree, right? I mean, I hope you guys watch some of these videos and you got some sort of education from this and saved yourself a little bit of money, because I mean, again, I got a hit here, but not as bad as I could have, because this is what Cignals was built for, is to sniff this type of stuff out and just trade with the volume where it's coming in. Here you're starting to see bottoming signs, right? Okay, so listen, this is gonna get worse. This is not gonna get better immediately. If you think we're going to like 10 grand off this right now, I mean, my orders on spot are much lower than this. I really think there's a good chance we can go down under 3 grand. And this is a crazy thing to think about. If you watched the last video, we spoke about there's no reason to get super bullish even if we broke 11.5, because you still got to get through 12, 13, 14 before it gets serious. We have at least $10,000 worth of ground to cover before you need to be bullish, like heavily bullish, right? But that doesn't mean to be so bearish and FUD-minded, I guess, right? Where you're going to dump what you have into the lows. You need to get ready for this to get worse, and you need to be defensive. You don't do things that are going to wreck you. And what I mean by that is keep your risk tight. I mean, I think I say this in every video, like you got to keep your risk tight, because if you don't, you're really going to hurt yourself and you're going to wind up blowing up accounts. I mean, it's not something that you want to do. It happens from, you know, time to time when you're, you know, I guess a newer trader. It's just not something you really want to do to yourself. You don't want to have to experience that if you don't have to. So keep your risk tight and don't just be, you know, swinging it all over the place, trying to get every cent of every move, because you're going to lead, it leads to ruination. You know what I mean? I don't know how else to put it. So be very careful with that. I know a lot of people are trying to catch, you know, the volatility and the swings that are, you know, leading to some good scalps here. You know, you get these hundreds of dollar moves in Bitcoin. It becomes very tempting to overtrade. Just keep that in mind. That's all. If you're, you know, in the market actively right now with all the headwinds we have from obviously the fallout of what's happening here. And, you know, I think you have to just understand at some point this is going to get better, okay? Can Bitcoin go to zero? Yeah, we're going to find out right now, honestly. I mean, this is it. So this is an existential thing for Bitcoin here. It's not going to die, in my opinion. Bitcoin was built to to withstand the long haul, right? Because what's happening here is transitory. They like to say this in finance a lot, transitory. It is. It really is. I mean, I firmly believe that. I have, listen, I'm all in. If it goes under 1,000, I'll be buying. You know, I'm not going to even pretend like I'm not going to go and do everything in my power to back up the bank if it came to it, right? So, I'm not really worried about this thing going to zero, because in 2014, you know, during that bear market, where we went from like 1,200 to like $1.70, that was an existential crisis, right? And I held and I bought more, and here we are having the same conversation 6 years later. A lot different terms of that conversation, right? A lot different. But I believe, again, I'm not worried here, because if it goes lower, it gives me a chance to really, really put the vice grips on what I'm trying to do long term. Okay? I don't think you should be so scared. If you were super bullish at 20K and you're not super bullish at 1,000, 900, 800, you're in the wrong game. And you should really consider, you know, getting a job and selling your Bitcoin the next pump and calling it a day, you know, seriously, because that does not even make sense. How could you be bullish when something's 20K and overbought, but when it's literally free falling as a result of like overdone liquidity issues, and you know at some point intermarket rebalancing is going to come, and there's going to be that decision, where does this liquidity go, where is it best preserved, and you're not thinking Bitcoin and to some degree gold, right? I mean, I don't know, then there's no reason for you to even be watching this video. So don't be one of those people that like sells everything right now because you think like it's over, game over. Even if it goes under 1,000, it's not game over. If it goes to zero, okay, we have a problem. But again, I can't imagine that at least Bitcoin maximalists I know are going to be backing up the bank for this, literally dumping everything into it. So I will be leveraging everything I possibly can to buy at 1,000, 900, 800, whatever it takes. That may not be for you. Don't take this as financial advice, because my mindset's way different than a lot of people's mindset when it comes to the way I see the monetary system and global economics. So again, it's not financial advice, but don't wreck yourself here. Like, give it some time. Even if you're not willing to buy at 1,000, 900 for some reason, you want to wait to buy at 10,000 for some reason, whatever. Do that, but don't wreck yourself here, okay? That's the point I'm trying to make. But that's all I wanted to get at. You know, use your best judgment, keep your wits about you, and, you know, just be cognizant of what's going on. And, you know, again, use your best judgment. Whatever feels right, do it. But just wanted to touch on that real quick before we end the video. And, you know, here we did have some divergence, some sort of temporary bottoming signs, which was welcome, as small as they were. Up top here, we're capped 62.50 to probably about 65, 6,600. Just from a broader market perspective, makes sense to have that unfinished auction up top, kind of capping us for the time being. If you've been with us for the past 7 months or so, you know that a lot of activity in that area was tested as a bottom quite a few times before it ultimately broke last week. And now we have this nice little $1,000 range here, okay, for the time being. Underneath here is an unknown. It's the abyss, kind of. You'd have to go all the way back to about a year ago to get some meaningful levels. But my levels that I'd be looking for if we traded below here and stayed below here, 2,800. About 1,400, probably somewhere around, if it got really, really, really bad, 600. So be ready for that. If it did, that again is so worst case scenario. But again, we don't know what's going to happen. This is again a liquidity crisis that is broad based. You know, you saw it in '08. You're seeing it again now. You know, you got to watch the forex market specifically here. Treasury markets specifically here, because that's where you're going to see those intermarket flows most in the onset of a liquidity issue, is these markets that get overlooked, like, you know, forex. You see the bid in the dollar. You see the bid in the yen. You're going to see it in the Swiss franc and all those type of currencies, right? And then once there's a resolve, okay, and there's enough liquidity, and it kind of dies down, where the I guess ferocity of the moves lower kind of just abate a little bit, you start to see that money go back to work, and that money will flow into the treasuries. It'll flow into gold. It'll flow into silver. It'll flow into Bitcoin at some point, right? And that's where not fudding it all out here is going to pay off. So again, it could get worse. We don't know, but again, this is the signs you look for. You look for these intermarket rebalancing. It's going to start in FX because that's the liquidity itself. It needs to get flush, and once it's back and it's in the yen, it's in the Swiss franc, it's in the dollar, and that starts to that accumulation starts to abate. It goes into gold, silver, Bitcoin, treasuries, and then eventually CapEx starts to pick back up. It goes back into oil. It goes back into silver. Copper. It goes back into lumber, and then it starts to spread even further. And you don't want to wait until it's too late, right? So keep that in mind. Watch the markets and wait for that intermarket rebalancing, which is surely on its way at some point. Especially once the Fed gets crazy and starts pumping out all kinds of banana stimuluses, where you're going to see kind of like almost a helicopter money, in my opinion, right? Where it's going to be outright debt monetization. Like, wait, we're not far. Those are the last bullets of MMT. Wait, they're coming, and that's when you're going to have to own Bitcoin. So don't get too scared. We're going to make Cignals free, okay? We want people to learn. We want people to understand the way, trading with the volume, watching these inflection zones, watching things like what you're seeing here, where volume just literally there is no liquidity, it disappears, right? We want to teach you guys, and we want you guys to get familiar with this type of charting, and the only way to do it is to make it free for the time being. So you guys can just sign. It's not going to be available for free just yet. We need about a week or two to kind of just make some changes, but it will be free. We'll update on Twitter. Please subscribe to our channel. That would be great. And like this video. Drop me some feedback so I know what to touch on next. And if you have any specific questions or comments, please feel free to leave them. I'm Chris from Cignals. Go to Cignals.io, check back, and get your free account. Hope you guys are safe, and have a great day.